Hey everyone! Today I'm breaking down a crucial topic in business studies. Business assets. Sounds complicated? Don't worry, I'll make it super simple for you. First off, what are business assets? In a nutshell, assets are things a business owns that help it make money. Think of them as valuable items or resources the business can use, sell, or turn into cash. Let's dive into some examples to make it clearer. Imagine a restaurant. Its assets include the building where it operates, the kitchen equipment, like ovens and fridges, the cash in the bank, which is money it can spend or save, the inventory of food and drinks, like ingredients and beverages for customers. All these things are valuable to the restaurant because they help the business make money. Simple, right? Now let's take a look at a local grocery store. Its assets might include shelves and coolers for displaying products, cash registers used for transactions, inventory of food and drinks like fruits, vegetables, and packaged goods. These items help the grocery store run its daily operations and make money by selling goods to customers. Alright, now you know what assets are, but did you know there are different types? Let's break it down. 1. Current assets. These are things the business can use, sell, or turn into cash within the next year. Think cash, food inventory, or money customers owe the business. 1. Non-current assets. These are long-term things the business will use for more than a year. For example, buildings, equipment, or vehicles. And there you have it, a quick and easy rundown of business assets. We'll explain these two types of assets in more detail in the next video, so stay tuned. Don't forget to like, subscribe, and comment on the Accounting Simplified channel for more simplified business content. List in the comments what assets you can recollect that you own. See you next time!